everyone, this is the Trader Investor, and today I'm just going to show you how I'm using the screening in TradingView to find swing trading opportunities. I'm using it for options trading, for calls and puts options, but you can also use it for straight up stocks, whether on the long side or the short side. It's the same concept on how to find the markets that you need and how to find the opportunities is the same concept, but I'm just going to use it for options mainly for my purpose. And as I find these opportunities, what I look at is save. Save for me is structure, area of value, and execute. Execute meaning finding my right entries and finding my right exits to be able to really look at the complete package and not just a single point of transaction, right? I want to look at the whole thing together. I want to see what the market is doing. That's the structure. And currently, we're in a bull market with we're experiencing some pullback, some range trading in the last couple of weeks, but nothing has told me that the overall bullish market is broken. So I'm looking at bullish entries for at this moment. And the screening that I'm going to show you is going to focus more mainly on the bullish entries. And then I want to look for a pullback. That's my style, my strategy. I look for pullbacks into an area of value, and I'll show you how I find my area of value, how I define it. Once I am at the area of value, then I execute. And I execute and find my precise entries and exits. And exit includes both the exit if I'm right and exit if I'm wrong. Both have to be in place as I go into my trade. So let me show you how I am doing it to find the opportunities and how I'm using the screening. So in TradingView, there's a screener section here, stock screener. So I pull that up. And what I want to look for is a short list that is in a current pullback. And so my view is, I just want to get a general idea of what the sector it's in, what the industry it's in, and the last price I want it to be below the exponential moving average 30. And I'll show you what that means when we start looking at charts. Just percent change, how is it doing today? Again, this negative number is a good thing for me because it tells me there's a pullback for me to start looking at a possible entry position, a possible opportunity. I want companies that have very high volume, that are really, really liquid. If it's not liquid, then the options are going to be weak, or it might not even be optionable. Therefore, I don't want to be in that game. So I want something that is really liquid. Relative volume just shows me over the period of 14 days how today's volume is acting. So if it's above 1, it means it's greater than the average volume. If it's below 1, it's just trading just right below that number, depending on how far away it is. Overall analyst ratings just gives me an idea what the analyst sentiments is, and then I look at various performances, right? How is it performing over different periods of time? So that's again something else that I look at over year to date, 1 year, 6 months, 3 months, monthly, weekly. If it's strong here, then it makes me comfortable that it says, okay, this is just a short-term pullback that I can take advantage of. And being in the middle of a pullback is a great thing for me. So let me show you what filters that I use there. I already mentioned I want price to be below the exponential moving average 30. I want an average true range of 2 at least or above, because I want stocks that have good moves on a daily basis. I want them to really move. I want the US market. That's what I focus on. And then I just set up a few exponential moving averages against each other or against price. I want price to still be in that bullish narrative. So if it has to be above the 100, it has to be above the 200. And my 5 above the 30. I want my 10 above the 50, 20 above the 50, 30 above the 50, the 50 above the 200, that shows me that we're in the right direction. It's just a short-term pullback. That's really what I want to focus on. And then I look at RSI above 30. If it's above 70, it kind of worries me. So that's why I want to start looking at them above 30. If it's way below 30, we might not be done pulling back. So I want that turnaround confirmation. It's just a confirmation. And I only look at stocks and ETFs. So this is just basically how I set it up. And I call this bottom fishing, is trying to find the bottom of the pullback, not the bottom of the whole year or anything, just the bottom of the pullback. That's really what I'm focusing on. And so based on that, it gives me a list of stocks to look at. So 33 for now. And what I will do next is I have this watch list that I have created. And every time I run this scan, I add them to this watch list. And I just click here, Control A, and then right click and enter symbols to watch list, and it will put them all in here. And if they're already in there, it doesn't duplicate, so no worries. And if I go in here and I don't like something, I just put an X next to it, and I'm done, right? I can get out of that. I don't need to see it. But 30 to 40 is a good range, and even less than that, I love it. When I ran it earlier today, it was about 9, so I had the 9 that I was already analyzing when I was doing this. So once you have the list, you've sent it to your watch list. We have no more use of this for today. You come back to it tomorrow. So for now, then we can close that, so we can start looking at the charts. So what I want to do is then go one by one. It has already filtered out for me. On this 33, I go one by one to analyze them. And I will do a few to show you how I'm looking at them as I analyze them. So I start by looking at the monthly. What is the monthly saying for this particular stock? And for this one, the monthly is doing really great, right? It's an uptrend. Everything is very well, so nothing else to look at. And so then I go to my weekly. So when I go to my weekly, I started to notice that on this one particularly, it has, it pulls back, it moves up, it pulls back, it moves up. But then here, it is playing in a range on a, open to close basis. It's in a range. So I put this box, and it's kind of looks like a bull flag, but it's also a bull pennant, because then if you look at the wicks, the highs and the lows, and makes those trend lines, it's also a pennant. Either way, for me, I'm looking for an opportunity to go long at the break of this trend line, or at the break above these boxed high. And on the trend line, I just set an alert, and I don't have to look at this again. It just shows me when it's ready. So now that I have noticed that there's some sort of a flag on the weekly, I come down to my daily chart. And on my daily chart, that area here, I already know that this is the flag area. Then I have my trend lines. It's still the same confirmation. I'm looking at the trend lines, and I'm ready to enter when I get a break above this trend line. The green trend line you see comes from the hourly. Because what I have done is I went down to the hourly then, and instead of waiting for that trend line up higher here, can I go in a little bit more aggressively and find an opportunity on the hourly? Because as I said earlier, the hourly is my trigger entry point. And so if you want to be aggressive, you can say, well, you know what? It's finding support here along the way. And as soon as it bounces from support, I can enter. It's a valid entry, and you just have your stop right below those areas. Or you might say, I don't like this wick here, so I might go all the way down here. A little bit more moderate would be a break of this trend line. But then the more conservative is, it breaks this trend line and it makes a higher high and then a higher low. And then you can enter at that higher low. So this is how I would look at the first symbol here. And I will I don't care what they do because all I want to focus on is a trading opportunity. If it's a liquid company, then for me it's good enough. Doesn't matter what the company name is or what business they're in, unless I know something about the company that I really dislike and I don't want to take advantage of that opportunity because I dislike the company. Then I move on, and very rarely will I see those things. But for me, that's just how I look at it. So next company, again, going back to my analysis, I go to monthly. That's the first thing that I see. So on a monthly basis, it had a good run up. It had a deep pullback, but over the last few months, it's again in a bullish trend, knowing that it could have some headwinds up above in the 45 area or 50 area. So those are potential areas where it could have an issue. And this could also be the formation of an evening star, which means if the next month we close below this lows here, it could be reversing, making a lower high to reverse and to make a lower low. So that's a possibility that I also want to think about. So when I look at the weekly, same narrative. It's in an uptrend over the last few weeks. So this is fantastic. And then I go to my daily. This is my, closest to entry signal time frame. And so on the daily, it had a pullback, but it made an inside bar. Keep in mind of all your candlestick patterns and your chart patterns. And so it made an inside bar. So tomorrow, if it opens above this highs, which as you can see, I have put an alert, I'm good to go for my long entry, and I will start thinking about uh, my exits. So if I come down to the hourly, nothing has really changed because it had a deep pullback, and now it's recovering. I just want to see it cross this line, so we have a new uptrend that resumes, and I want to take advantage of that. So next one on the monthly chart. Wow, nice monthly chart. It's been up for the last few months, straight up parabolic move. I love that one, and so I want to take advantage of it. So on the weekly, it looks like we're in a consolidation. Again, it looks like it's forming a bull flag, or it's forming a pennant, however you want to draw your lines, or it's forming an ascending triangle if you draw a trend line, a horizontal resistance line here. So as soon as that area breaks, I want to go on the upside. And I have an alert here just to give me an indication that, hey, it's starting to come up. So, start to look at this closely. But for now, it's just something that I have as an alert. And so when I go to the daily, same thing. It goes up, it's pulling back, it goes up, it's pulling back, but it's pulling back to this daily trend line. So I'm comfortable to enter as soon as it touches the trend line and reverses. Like on this day, I didn't trade this on March 5th, but this was a good candlestick pattern. It was a good hammer right at trend line, so it was good to enter on the following day. So same thing here. If that happens, enter on the following day, and the hourly will just confirm that for us, right? So it's coming down, it's making lower highs, and it's coming down, and I wanted to test the trend line and resume the bullish trend. That's my expectation. So I can enter as soon as it touches if I'm very aggressive with a tight stop, or I can wait for some confirmation and have a little bit wider stop, but I also have a wider exit. If I'm entering aggressively, my exit is near this high, so it's not a lot of rooms for me to grow for all my aggressive entries. So just keep that in mind. And the other thing I want to mention is when you look at the daily on this one, uh, it looks like a head and shoulder pattern forming. And so here's the neckline. So if this is broken, then again, I want to make sure that I am not entering a long side if this trend line is broken. Or it could be an horizontal line that is also broken. So, somewhere between this horizontal line and this trend line is where I will decide that this head and shoulder is confirming a downside. If it is confirming a downside, then I look for an entry to go, to break it down here, and then another entry potential, when price touches here, and then just show you this. When price does that and price does this again, this is what I want to see. This is what I want to see, so I can enter and take a position here. So that's what I would like to see happen if the trend line is broken and we are in a down trend. So for now, nothing is broken, so I'm good just to wait for that long side. So next one, we'll just do two more real quick. Very strong uptrend. Not much time to spend there. On the weekly, it's a strong uptrend with some pullback, and the pullback is testing the trend line. So I'm happy there because it's only testing the trend line and it is not penetrating it. So I'm looking for a reversal to enter. And so my daily is showing me, okay, it's at the trend line. However, something else that makes me cautious is we're making new lower highs. And so am I going to make another lower low? In that case, it invalidates my bullish narrative for this particular ticker. But if we reverse from this trend line, then I'm happy and I'm good to go, because that's what I'm looking at. And then I'll go to my hourly. This is my hourly trend line. If this trend line is broken, that's where I have an alert to the upside, then I can enter. I would prefer for price to come down to my support area before it breaks this trend line. I'm happy for it to do that. That will actually be a good thing, but it's okay if it breaks it here because I'm close enough, right? It depends on what you think is close enough, but to resume the upside. So let's just do one more. We'll do Carvana, and we start with our monthly. Monthly, very good uptrend, but the last 3 months, it's a slow movement. It goes up and comes down very wildly, up and down wildly, up and down wildly. So I want to be a little bit more cautious and maybe even skip this one. But here, again, if we look at chart formation, this looks like it could be some sort of a flag forming here, consolidation. I just want to make sure it's consolidation, not distribution. Distribution means the institutions are dumping it and it's going to go down very, very heavily. So I don't want this to be a distribution. So I want to make sure that the upper limit, the resistance is broken. That's my confirmation. So I'm not that keen to enter into Carvana for now. And so when I go to my daily, this is the areas that you see that I blocked off in the weekly and monthly, and it's playing up and down this range. You can enter at the low of the range and exit at the high and then do the opposite side from high to low. But I would caution you, because we have done it 3 times already. If it comes back down, very high chance that it could break it. I mean, you could see what it does if price remains above these lows and gives you a good reversal entry based on the hourly, then that's great. But just be careful, just be watching out for this, because it has happened a few times. So this is basically how I look at my charts, how I analyze it based on save, structure, area of value, and execute. Find the right entry and find the right exit. And based on that, I make my decisions and I am ready to go. I am done with was